Hey everyone, welcome back to Corporate Tutoda, the place where we decode the language of big business. Today we are diving into an 8K filing from Inovio Pharmaceuticals. Let's see if this report is the shot in the arm their stock needs, or if it's just more corporate mumbo jumbo. In a nutshell, Inovio is doing a public offering, selling shares and warrants to raise some cash. But is this a strategic move or a sign of financial strain? Let's break it down and find out. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss this filing and other corporate events with fellow investors. First up, the date. This report is dated July 25. That means all the important stuff we're about to talk about happened on or around that day. It's basically a snapshot of a significant event for the company. The main event here is an underwriting agreement. Think of this as a deal Inovio made with some financial firms called underwriters to sell stock and warrants to the public. It's like hiring a real estate agent to sell your house, but instead of a house, it's shares of the company. They're selling 14TT57115 shares. That's a lot of shares. They are also issuing warrants that are essentially options to buy even more shares later on. There are two types of warrants mentioned here, named Series A and Series B. These Series A and B warrants let the holder purchase an additional 140-285-7115 shares of common stock at a later date. The price to buy those additional shares is $1.75 per share. The underwriters even have an option to buy more shares themselves. This is called an option, which means that for 30 days they get to decide to buy another 2142857 shares. So how much money is Inovio expecting to get from all this? About $22.5 million after paying the underwriters. That's the net proceeds from this sale of stock. The details of this deal, including the shares and these Series A and Series B warrants, are filed for everyone to see with the Securities and Exchange Commission, or SEC, so everyone can know what's going on. Let's zoom in on these warrants a bit. The Series A warrants only last for a year unless Inovio gets a thumbs up from the Food and Drug Administration. The Series B warrants last 5 years. However, the holder has limits to making it, so they can't amass more than 4.99% if previously specified of the number of shares. Also, if certain big changes happen, like Inovio being bought out, warrant holders get some protection. The warrant holders can exercise their warrants for the cash or stock they would have gotten had they exercised the warrants right before the big change, or can sell the warrant for its value prior to that change. There are also links to the forms of the warrants in case you are interested in finding every last bit of language. It is worth noting one part of the forms because in addition to the Series A and Series B warrants, pre-funded warrants are mentioned here and there. These can be exchanged for the original warrants under certain conditions. Inovio also put out press releases about this stock offering. The releases announced the launch and then later the pricing of the offering. You can find those releases attached to this report. Now, a word of caution. This report contains forward-looking statements. That means Inovio is making guesses about the future. They might be right, they might be wrong. The company is warning everyone that things might not go as planned. They point out that the company's previous filings contain risks to be aware of. These reports are the annual report from the past year and the quarterly report from the first quarter of this year too. It's always a good idea to check those out if you're considering investing. So what's the story here? Inovio is raising money, which could be good or bad. It could be a move to fund promising research, or it could be because they need cash. Looking at the numbers, about $22.5 million is not a huge sum for a pharmaceutical company. The company is betting that their drugs are approved in the intermediate future because Series A warrants will have a very short duration. This could be beneficial but also dilutes the value of existing shares. This shows how important it is to have solid expectations on the company's pipeline and FDA approvals. It is also important to know how long you are willing to hold the warrants because they expire quickly. Ultimately, this filing tells us Inovio is making moves to stay afloat and hopefully thrive, but success hinges on factors outside of just stock market plays like this one. Alright, that's your breakdown of Inovio's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.